Hello and welcome, Pathfinders. Today we're going to dive into one of the most fundamental concepts in technical analysis, and that is trends. Whether you're trading stocks, crypto, or futures, recognizing an uptrend or a downtrend can make or break your trades. So let's go ahead and break it down. So what is a trend? A trend is simply the general direction that the market is moving. Think of it as the path price is following over time. And there are three types of trends. An uptrend, which is when price is moving higher. A downtrend, which is when price is moving lower. And sideways, which is when price is stuck in a range or what's called accumulation or distribution. First, let's discuss uptrends and how to identify them. An uptrend is when the market is making higher highs and higher lows. Imagine climbing a staircase and every single step is a higher high, and the landings in between are your higher lows. On the charts, you'll often see candles forming a diagonal rise, just like this. In an uptrend, traders look to buy on the dips or on the breakouts. Now let's discuss the downtrend and how to identify it. A downtrend is when the market is making lower highs and lower lows. Think of it like walking down a hill. Every step you take is lower than the last. On the chart, you'll see candles moving lower in a series of waves down, just like this. Now, in a downtrend, traders often look to sell on a rally or on a breakdown. Okay, now let's cover how to actually draw trend lines and identify highs and lows in the market. So we're going to go on TradingView. We're going to take our trend line tool, which is default Alt-T, and we're going to begin to identify the highs and the lows, which is the first part of identifying a trend. So we're going to start with this one right here. The market here has made a high. So you can see very clearly that there's market movement going down, and then the market has gone up, and then the market has gone down. Okay? So we're going to mark up the high. So what I'm going to do here is I'm just going to use a white line, and I'm going to double click on my line, and I'm just going to put high. And I've marked where that is. Now, important on your line tool, it will just kind of free float like this. Unless you hold down shift, it will actually snap to a grid. So we want to snap to that grid by holding shift and extend right across the tops of the bodies of the high. So the candle that made that highest high there, you can see this is the highest closing point. I'm gonna do it right there. Now the market makes a low, and I'm gonna come here and I'm going to identify right there at the bottom of the candle bodies my low, and then the market makes a high here, and then something changes in the market. This market makes another low, and then this is where we're now interested in what's happening in the market. Up until this point in the market had made a high and a low, and both of these highs and lows were actually created within this high and this low. And when you see that, that is called a range, and this is actually a sideways trend. That is until the market breaks and closes above the high or closes below the low, which you can see has happened here on this candle. It's closed high. So now what we're going to do is, because the market is breaking out of the range of the previous high and the previous low, this high and this low were created within that, in the range. What we're going to do is we're going to take our line tool again. We're going to go from the low of the body that started this rise here, okay, which is that lowest point. We're going to click there. And what we're going to do is we're going to connect it with this low right here. Now, that's not really useful for us because it doesn't predict anything for future movement. And we want to know, where is the potential for price to come back to potentially continue in an uptrend, because when you're in an uptrend, you want to enter a buy on a pullback. And so the trend line is a likely area of pullback that the market will respect as long as it holds this pattern. So what we're going to do is we're actually going to extend way up past it. And now I have to adjust my cursor so that way that line crosses the bottom of the body where it meets the wick at that lowest point. And now I have a trend line. Okay, this is an uptrend line. So now the market pulls back to the uptrend line, and you can see here it bounces, makes a rejection, and continues on to a higher high. So when it has returned to that point, that is where traders take entries from for the continuation to the upside. Okay, so now we can mark up here again. We have what's now called, this is now a higher low, because it went on to make a higher high right here. So the way that the trend line is drawn, again, is by going from the low to where the market has made a higher low, which led to the higher high. So now we just cross right through there, and that gives you your uptrend line. After this higher high was formed, the market pulls back, and it has now rejected and then continued to the upside. And again, this is another higher low here, followed by a, hold down shift, higher high in the market. Now the next time the market comes back, you can see it comes right back to that trend line again, and now we have another higher low. So this is that uptrend where the market is stepping up, and this is on the 15-minute time frame. So this gives you likely areas of rejection. So now we can see we need to extend this even farther here. Again, going off of that low to the higher low, and you can see these higher lows continue to respect that line till the market makes a higher high. And then this time, when it comes back to the trend line, it rejects briefly between these two candles. So you can see it bounced here, pushed up, and then on this candle it breaks. And so now that trend line has finished right here. That market broke it, and then now you have a change of pattern, and that uptrend is now going into a different pattern, potentially on a higher time frame, or the market could go into a range here, or it could go into a downtrend. So that is how to draw an uptrend line and identify your highs and your lows, which become higher highs and higher lows in an uptrend. Now let's cover more on the downtrend and how to draw a trend line, as well as understanding the range. So right here we can see the market has made a low. Mark that up. You see the market pushes up and makes a high. And then for the entirety of this day, from 9:30 in the morning until 4 o'clock in the afternoon, you can see that this market has remained within this range. So the market is trading within a range. It is making highs and lows within that range. So there is a pushes down, makes a low here, makes a high here, pushes down, makes a low, pushes up, makes a high. And you can see then the market finally breaks right here. So at this moment, this is where the range was broken, okay? And now we see the market make a new low. And this is where your downtrend now starts. Sorry, this is a low. Okay. Now what we want to do is we want to trace that back to the high that started that move. That is the high that matters. Just like in the reverse, that would be the low that matters. So here's the high that pushed down, market bounced off of that right here and pushes down to make a low. That's the point that we care about. Now we don't have a trend line to mark up until the market makes a, again, lower high and then lower low. So over here we can see the market has pulled up, and then right here it makes a high. This is a lower high, because here's the last high to the low. Here's the lower high, and then the market makes a lower low. So when you're making lower highs and lower lows, you're in a downward trend. So where your trend line would be drawn here, okay, we'll go to this point. Where your trend line would be drawn here is from the top of the red candle that formed the high. You would draw it to the top of the red candle here, which then starts the lower low, and you would extend it beyond right there. And now you have a downtrend line. Okay, now we can see the area where you would be most interested to take a trade from would be at that downtrend line, because the market is likely to give a rejection. So this is where a lot of traders look to trade, is off the downtrend line to the downside. So you'd be selling to the downside. So as the market comes back here, you can see it makes a pullback to the downtrend line, and you can see that it does give a rejection off of that area. Okay. So it gives a rejection off that area, and then let's see how the market reacts. I'll speed it up a little bit. Rejection, 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 and the market drops off. So these are the types of trades that traders look to take off of a downtrend line or an uptrend line going in the market. Now the difficult areas to trade are when you are in a range. A range can be very difficult because the buyers are trying to buy the market up and the sellers are selling the market down, and they're basically an equal battle. The strength of the buyers and the sellers is equal, and the market gets stuck. And so these are areas that are very challenging to trade, and the areas where we make money are those areas of high probability rejections where we're in a downtrend, or like I previously showed you, in a uptrend. So we typically want to avoid the range and wait to see higher highs and lower lows coming into the market. You draw your trend line, and then you know you have an area of interest where you're looking for the market to reject from in order to get big money trades like this, where the market pushes way down and there's a lot of money available within that. Okay, so this is how to draw a trend line and how to identify highs and lows on the market. So thanks for taking the time to watch this video. I hope that you have a clear understanding on what an uptrend is, what a downtrend is, what a range is, and how to identify your highs and your lows, and how to identify your trend lines. Thanks for watching, and I'll see you in the next video.